Yet again, another IPO opens for subscription, which goes by the name rkswamy Limited. In this video, we will discuss the IPO details of rkswamy, the business model and the industry it operates in, followed by the financials of the company, peer analysis and lastly the valuation. First up, let's understand the business overview of the company. Founded back in 1973, rkswamy Limited is an established Indian marketing services group that offers a comprehensive suite of integrated marketing, customer data analytics, and market research solutions. The company operates under two brands, rkswamy for the integrated marketing communications and Hansa for both customer data analytics and marketing technology and full service market research. Ranked 8th in India by estimated revenue, they serve leading companies like Aditya Birla AMC, Dr. Reddy's, Havells India, ONGC, Ultratech Cement, to name a few. Now let's look at the IPO details. The IPO opens for subscription today and closes on 6th of March. It has fixed the upper price band of 288 rupees per share. So for a retail investor, the minimum lot size would be 50 shares, translating to a minimum investment of rupees 14,400 rupees. rkswamy plans to raise 423.5 crores from the public, out of which 40% of the issue would be a fresh issue of 173 crores, while the remaining 250.5 crores will be an offer for sale, which means the existing promoters and shareholders are selling off the shares. The IPO has the following reservations: 44% for anchor investors, followed by 29% for qualified institutional buyers, 14.7% for non-institutional buyers or HNIs, and lastly the retail quota of around 10%. So what are the objectives of the issue? The primary reasons of the IPO are to raise funds towards funding capital expenditure for setting up a digital video content production studio. Second is for funding investment in IT infrastructure development of the company. Third is for funding setting up of new customer experience centers and computer-aided telephonic interview centers. Lastly, for general corporate purposes and funding the working capital requirements of the company. Moving on to the market opportunity. The Indian marketing services market grew at a CAGR of 5.6% between fiscal 2019 and 23 and reached rupees 1,936 billion in fiscal year 23, driven by rising corporate spending and economic growth. Advertisements form the biggest chunk of the overall marketing services market. Digital advertising and data analytics are expected to fuel further growth, reaching rupees 3.5 to 3.75 trillion by fiscal year 28. All in all, while the market is fragmented, large agencies and media companies dominate advertising, while smaller players contribute significantly in research. The addressable market is expected to grow at a CAGR of 12.5 to 14.5% by fiscal year 28. Now coming on to the financials. The company recorded revenue from operations of 141 crores in the first half of the fiscal year. The total revenue grew at a CAGR of an impressive 17.8% from fiscal year 21 to fiscal year 23. It also maintained healthy gross margins and EBITDA margins in double digits, showcasing the efficiency of the management. When looked at the bottom line, the company recorded a net profit growth of 62% to 31.25 crores in fiscal year 23 as compared to the previous year. However, in the first half of the fiscal year 24, it has achieved only 7.93 crores so far. When looked at the return ratios, the company recorded double-digit ratios in fiscal year 22 and fiscal year 23. But with the reduction of cash generated from operations, it has hampered the return ratios for the first 6 months of fiscal year 24. An important point to highlight is that the total borrowings jumped to 51 crores from a mere 4.5 crores as the company obtained working capital, demand loan and cash credit facility from the banks for meeting the business requirements, which has resulted in increasing in borrowings and thus an increase in the debt to equity ratio. Now looking at the valuation of the company. When looked at the valuation of the company as compared to its peers, based on the upper price band of rupees 288 per share, the price to earnings ratio of rkswamy is at 41 times. Now the average P stands at around 69.5 times. Now coming to our last segment, which are the strengths and weaknesses. First, let's start with the strengths. rkswamy is an integrated marketing services provider serving clients for over 5 decades with a pan-India presence. The company's services cover 12 Indian cities with 12 offices and 12 field locations. It has recently established foreign subsidiaries in Dubai and Bangladesh to extend services to the Middle East, North Africa and South Asia. Coming to the weaknesses, a significant majority of revenues, about 50%, comes from the top 10 clients and about 75% comes from the top 50 clients. Depending on these clients poses a potential risk to business financial results, and overall stability. Likewise, the company's revenue is heavily reliant on specific key industries, and a decline in demand for marketing services within these sectors may lead to a reduction in revenues. Having said that, this is me, Ralasan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.